It was a strong handover that we got from Wall Street, but that's not converted into a positive cheer for the Asian markets.
I think the optimism about India is actually completely justified.
Immediate next level is the 38.2% retracement of the fall.
Indian economy is still growing. It's growing well despite, exports being under severe pressure.
The first tick on the index is very, very flat. 19,680 is what the Nifty is trending at.
The large caps have done much worse than the small and mid caps at this point.
That the dollar has been strengthening, and that typically tends to pressure emerging markets and Asian equities.
Existing shareholders of Strides get the benefit of playing the upsides of both the platforms.
Given what is happening to the US government bonds, the Indian government bonds may not be incrementally that attractive.
It's absolutely unchanged on the Nifty and the sensex.
We have 5 more 777s coming in over the next 5 months.
DGGI, the Director General of GST Intelligence, has sent a GST notice to fantasy gaming.
Well, that's the day so far, and it's not been very much of a day in terms of just the price movement on indices. Stocks is a different matter. We'll get to all of that in just a bit. We are coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good afternoon.
Hi, good afternoon, Prashant. Good afternoon, Nigel. Almost a day where you feel like you could have just sat this one out, right? Nothing seems to be happening. But there is news, and stocks are reacting to, these little bits and pieces of information that we have, and we'll talk about that as we go along.
Yeah.
One sector, I guess, that stands out is autos, and we're seeing some traction continuing, at least over there.
Yeah. I like it. You're wearing white, Surabhi. It's the color of peace, right? Peace between bulls and bears, nothing.
I think, let it be just steady for a bit.
And Surabhi is a little under the weather, so I think that's what she said. You'd rather sit it out.
Exactly.
We'll feed you tea and what else? Right?
Look,
Nigel?
director is arranging
I think tea's good for now.
Okay, well, let's just take it from there. So markets absolutely quiet and not very much at all on the Nifty and the Bank Nifty. Actually, on both those indices, what we're seeing so far, and things could change in the next 60 minutes, you have what is called the inside day. So you look at the range today and the high to the low, it is within the range, the intraday range on both the Nifty and the Bank Nifty from yesterday. So, the candle is inside the previous candle. So it basically indicates exactly what it is, which is, the range tightening a little bit of indecision and not very much by way of activity. Banks are visibly the weaker of the two indices as compared to the Nifty, and I'll tell you why. For the last 2 days, the last Friday and then yesterday as well, we've been pointing out how the Nifty Bank has been on an intraday basis crossing 44,778, which is the 61.8% retracement of the rise from the end of August to the high in September, but it's not been closing above it. But intraday, it's taken those out 2 days in a row, but today it's not even done that. We've not even kind of gotten to those levels, and that's why I'm saying both on a sort of on-the-day basis and as compared to the last 2 sessions, this is a weaker kind of day. Yesterday, in the broader market, mid-caps were up 0.5%. Today, small caps are up 0.5%. So broader markets, keeping large caps aside, are, or rather seemingly are in a slightly better place at this point in time. But, will next 60 minutes bring something new, a little bit in terms of a price excitement? We'll find out. Surabhi, over to you.
Well, in terms of sectors, on the large cap screen at least, Prashant, today the disappointment has been financials. They've not fired, so there's no clear follow-through. If that's what the bulls were hoping for, they've not got that. Let's pull up the Bank Nifty. It's been consistently sort of underperforming the Nifty. It's not down too much, but that's where a part of the pressure is coming in from. And you have most of the big names there, Kotak, IndusInd Bank, ICICI Bank. They're pretty much piled up at the bottom side of the screen, but range bound. So the best case scenario for the bulls is that there's no breakdown on the Bank Nifty either. The other sector that's not worked is IT today. And as we're getting closer to results season, it seems that IT, which has had a great rally, there's some profit taking, some shakeout happening over there. So your names like Wipro, TCS, Tech Mahindra down anywhere between 0.5%, 1 to 1.5%. What has worked, like I was saying earlier, is autos, and that whole trend of buying ahead of the festive season. And today I think we have some of the brokerages as well. Jefferies, for instance, on Aisha, that's caught that stock in a bit of a upward storm, 3%. It was actually at 4.5%. It's cooled off a little bit. But Aisha has been a good story today. Bajaj Auto, some of these names, Hero Moto. And then, of course, Nigel's stock, the one that he covers so closely, Tata Steel. We had good news coming in from the upgrade there. So I guess wherever there's news flow or some of this festive anticipation, we're continuing to see some green there.
Well, that's right. It should be in the point on Eicher Motors, right? Certain brand recall cannot be disrupted so easily.
You're a loyalist, complete loyalist, aren't you?
Yeah, and in fact, I've tested both the other two bikes as well, and I like them. But it doesn't mean that I'm going to get out of my Royal Enfield. Maybe I'll try to add on another bike at some point of time. But I'm going to, I just believe I'm so comfortable with it because from the time I could ride, I've been riding the Royal Enfield. So I've ridden both the other bikes.
But you're not willing to let go of your RE.
Yeah. So maybe I'll have to add to the portfolio, add another bike.
We can get Nigel off the bike, but we can't get the bike out of
And that's a rich rider speaking. He's looking to add to his bike portfolio. Did you hear that, Prashant?
No, it's all hard. Yeah. I mean, riding is something that's special to me. I may not travel the world, but I want to ride on my motorbike across the country. Getting back to the markets, though, the Nifty Financial Services Index, that's the one that's expected to move in the last 60 minutes or so because it's a Tuesday and you'll have the weekly expiry that will play out. I'm looking at the options data, 19,750 call. It saw a big amount of open interest build up. The premiums come down by half because of the writing that we're seeing out there. But at the start of today, the premium was around 120 to around 130 rupees. So you add 120, 130 to around the 19,750 and you'll get the resistance level, 19,870 odd. And just look at the high and low of today. It perfectly ties in there. 19,772, that's the highest part of the day. And we went down a little bit. And in fact, we bounced off that mark as well. I think that's, the broad level. So we'll have to keep an eye out on this particular mark. If we break, say we break that 19,853 odd, we try to move up, then maybe in fact we'll be in for a surprise on the upside. While on the downside, 19,750, which is closer to the low point of the day, that's the one you're looking at. How do you position yourself though for the final hour of trade? Mitesh Thakkar joins us to tell us exactly that. Hi Mitesh, how are you reading today's market action?
Well, good afternoon. Better than what we have seen for the last few days. A flat market is most welcome after a decline, which means that there could be some beginning of a consolidation. We still don't have proper evidence to say that we'll see a consolidation and a reversal. But I think not falling is a good thing. Also, is the fact that 19,550 was an important area for me to watch out for. We haven't approached that level, so I believe that that could come into play in case the selling momentum decreases. And then even if you get a new low, you might not break below 19,550. So keeping that kind of a view, I think we are now trading with stock-specific biases. I would want to buy closer to 19,550 and then take it from there with a stop of about 45-50 points. And on the stock side, I have Chola Finance as one of the buy calls, which I recommend buying with a stop at about 11.75 for targets of 12.50. And ICICI Bank is on the negative side, which I would recommend selling with a stop at about 9.60 for targets of 9.30.
Okay, that's an interesting list there. By the way, just a quick word on Sundaram Finance. Mitesh, any thoughts here? I don't know if you looked at it, but suddenly it's got a move going. I think move started sometime around the middle of September, but it's from 2,600 to 3,300 now. Very fast.
And yeah, I think, last 2 weeks, the move is very fast. The fact that the stock is broken into all-time high suggests that there's no historical supply pivot. And while it's mildly overbought, the way the weekly and the monthly charts are shaping up, Prashant, I think that we'll see, significantly higher levels from here. The only thing is what can happen is that it can give you a 1-2 day kind of a pullback. So if you're willing to take a positional bet, buy it with a deeper stop loss at about the levels of 30, 50, or maybe just marginally below that, I think this stock is possibly showing you signs of getting towards 3,600 to about 3,700 to begin with, maybe even higher.
Okay, Mitesh, thanks very much for that. Well, we'll come back to you for more in a bit from now, but let's address some stocks which are moving around. Varun Beverages is surging in trade after Bank of America raised their price target. I mean, not as if it needed that upgrade or that push. It's just been a phenomenal outperformer over the years. Mangalam is here, though, with this particular call and what they're saying. Mangalam.
Well, what's interesting is that despite the stock having seen a stupendous up move and, like you said, a phenomenal mover over the last few years, Bank of America believes that there is still room for more. And they have reasons for that. The first one, of course, is that, they believe that going forward over the next 3 years, the revenue of the company may compound at a pace of 19% and the profits would compound at a pace of 23%. And that would be much higher than the entire staples industry. So that calls for further outperformance out here. Secondly, there are a lot of growth triggers for them as well, notwithstanding the erratic rains. In fact, the second quarter would perhaps do better for them than what traditionally second quarters would do. And that's largely because there was absence of rains in one of the months as well. Not just that, higher distribution, more new products, as well as products like Sting, which is the energy drink, which is their fastest growing product, could actually provide a much more bigger growth opportunity for Varun Beverages going forward, and as a result of which they have a target price upwards of 1,030 and a buy rating on the stock.
Okay, 1,030, and what a run the stock has had. 78-79% up in the last 1 year, and brokerages are still bullish. That's 4.5% today. Let's put up a 1 year on Varun Beverages. It has been quite an appetizing ride for bulls, one can perhaps say. We have Dimon Mehta joining us on the show this afternoon. Dimon, good afternoon. Is Varun Beverages something that would be of interest to you?
Yeah, good afternoon, Surbi, and thank you for having me on your show. I think if you want to look at any FMCG stocks which are still growing at solid volume, double-digit growth rates, then Varun Beverages certainly fits that criteria. And the way the company is expanding its capacities organically, inorganically as well. And the way it is spreading to the rural areas, I think with more and more electrification, it is setting up these freezers, and that's how they are generating the sales in the rural areas. So I think that amongst all the FMCG categories, soft drink still is a kind of a not so mature category. And Varun Beverage is clearly exploiting that. And they have got, I think, with the PepsiCo, the approval or for use of the brand and everything is there like 2030, if I'm not mistaken. So there are no risk factors on that count as well. So very positive on the company. Disclosure, we and our clients are invested in it. Maybe not at these levels, but maybe at a correction of 5, 10, 15% or so. This stock will then offer a good investment opportunity with some margin of safety as well.
All right, it's actually a quietish day, Dimon, but a few stocks in the broader markets are doing a thing of their own. Vodafone Idea, it's now moved to the high point of the day. It's almost a 12 rupee stock as well. So that's seen a big up move, particularly in the last 1 month or so. Vodafone Idea is moving up that maybe they can raise the required funds. So that's one stock. Let's get it up for you, our viewers on the screen. Intraday chart should come up at some point of time. And Colgate is the other one as well that's spiked up. And that entire move has come just in the last 30 minutes or so. Both of their intraday chart comes up for you on the screen. Dimon, quick comment on Vodafone Idea. I know normally you're a little conservative. You rather stick to the market leader. But this one, Vodafone Idea, would you look at it or you stick to the other telecom plays?
Good afternoon, Nigel. I think it's attracting a lot of trading frenzy over there. And we keep hearing news of a fresh infusion of funds by the promoters. And then there are some strategic investors also whose names keep on popping up. But the management has steadfastly denied any strategic investor. But who knows, I think India is a great destination and a lot of tech companies may want to get an exposure to the Indian telecom industry and then use the user base of Vodafone to cross-sell other products and services as well. So it's an interesting proposition, but at best it's a trading opportunity. You cannot really invest in Vodafone at these levels and hope that it will generate a reasonably good return going ahead or so. So from a trading perspective, you may get another 5-10% from here. But from an investment perspective, I still feel that the best telecom play has to be Bharti Airtel.
Or, if you want to play on Vodafone, maybe Indus Tower, right? Because
yes, absolutely, yes. Yes, very positive. Yes.
Yeah, it gives you the potential upside from some sort of a infusion into Voda, but it's got it's not just that, right? It's not just Voda, but it's got other customers, etc. as well. But got that.
And extremely attractive valuations and good dividend yield as well. Great ROEs as well in that stock.
Yeah. Absolutely. Now, just coming to you on Dixon Tech, actually, let me bring in Surabhi first because, I think stocks up 4%. DAM Capital has come out with a note. They essentially have assigned a buy rating, but let's just hear it from Surabhi in terms of what they're saying. Surabhi, over to you.
That's right. So DAM Capital met with the management of Dixon Tech and they've assigned a buy rating with a target price of 6,000. There are two key takeaways from the management meet. They say that there are the potential growth triggers for the company going ahead. One being the mobile segment. Now they see the smartphone volumes to touch 35 million in FY24 and the revenues in the mobile segment to grow over 70% in the next 3 fiscals. And the second biggest trigger is that the company has participated in the IT hardware PLI scheme, in which which the company will invest 250 crores and generate a revenue of 48,000 crores over the next 6 years. They could also see large client additions in the laptop segment, which could then potentially be the next revenue growth trigger for the next 4-5 years. Now, they are valuing the company at 42 times FY25 earnings, and they say they are well placed in the EMS space.
Okay. Thanks for that, Surabhi. Dimon, any thoughts on this one? Actually, at the margin, right? I mean, this is, of course, a longer-term kind of view. But with Dixon, the excitement was about laptops, right? And whether they'll be able to make laptops here in India. But there was a meeting last Friday between the government players, etc. And we also reported on it. Some of what was being assumed perhaps will not happen. For example, these restrictions they've been further delayed, right? They were announced and delayed, and now there's another delay which perhaps seems likely. The requirement for licenses to import, I think that is also now completely, I think, done away with. That's essentially the indication one is getting. So, looks like what was being assumed that all of this import, what used to happen, will come straight away to these players and in a very fast fashion. That may not materialize. So, while the opportunity may be sort of long drawn and it's there, but at the margin, the news flow is not exactly positive. I'm talking about the last 3 or 4 days.
Yeah, Prashant, and I agree with you, that a lot of the positives have got captured in the stock price as well. It's going at a trailing 12-month price to earnings multiple of around 100 times or so. And no doubt, I think the prospects are great. The potential is fantastic. But at what levels will you buy a great business? That's the question you have to ask. So while if you're holding shares of Dixon Technologies, it's an easy decision. You remain invested. The stock is pretty fancied. But from a fresh investment perspective, I'm not so sure.
Okay, that's a view on Dixon. By the way, we didn't do a check on the way the world is shaped up right now, and the world's not been in such a great place. So if you contrast our performance today against that backdrop, then it's not that bad. Just a roundup of what Asia has done. Some of the markets by the time of close were down as much as 1.5%. That's Europe right now, largely negative. That's the CAC, FTSE DAX. Rising yields even in Germany are in big focus. The US 10-year is still at 4.5%. So there's been no change or no let-up in that entire higher yields situation. And that's how equity markets have reacted today, despite the positive close on Wall Street. So equities in general have been under pressure. So against that backdrop, maybe not that bad. We are just about flat. I guess, Prashant, this is something that's not going away in a hurry. So this global backdrop continues to be a bit of a worrisome point. Back to some of the themes here, there's some profit-taking happening in 2 areas which have been red hot: sugar and PSU banks. Let's pull up some of the stocks as well. Most of your PSU names, UCO and a couple of others. Bank of Baroda could be one that's counted in, IDBI Bank. Most of these PSU banking names are down, not too much, 2-3%, 3-3.5% at max. That's what's playing out. In the other space is sugar. Renuka, for instance, would be an example. Bajaj Hindustan is down about 1%. Dimon, on both of these spaces, what would your advice be? Because the rally has been absolutely phenomenal, more on PSU banks than sugar, but sugar has also been very, very active. Would you look at buying the dips in either?
I think so. I think the prospects are great for both the sectors. I think although they are diverse, PSU banks and sugar, but what is the common thread is that they are attractively valued. And in markets like this, where stocks are trading average 50p multiple good quality businesses, if you want to go for value buys, then PSU banks and sugar certainly fit the criteria. But those also have rallied, and now we are seeing a minor correction. I think another 5-10% correction would make an interesting entry point. And sugar especially, I think, finally, I think the cyclicality is gradually reducing because of the ethanol opportunity. And if they were to get higher ethanol prices, which the industry is pursuing, then that could be a trigger for sugar per se. I like the sector as a whole. You can go for the market leaders over there. And in PSU banks also, I think you could expect a good up move around the time the results are announced. I think the September results also be very good for PSU banks, and that could also offer a trading opportunity.
Okay. All right, Dimon, got that. Thank you very much. Good chatting with you today. Appreciate you joining us on the show. Have a great rest of the day, and we look forward to the next chat. Well, with that, let's move to the big exclusive interview of the day. JP Morgan Chase Chairman and CEO Jamie Dimon feels the optimism about India is completely justified in a freewheeling chat with Shireen Bhan on the sidelines of the JP Morgan India Investor Summit. Dimon also spoke about the current geopolitical situation and how it could impact the global economy. Listen in.
I love coming here. I've been coming here since 2005. We've gone from 6,000 employees to 60,000 employees. They travel the world, and it's not call centers anymore. It's everything, technology, analytics, cyber. It's extraordinary. Tomorrow I go to a new Mumbai center with 10,000 people. And then look at this conference. I remember 8 years ago or 9 years ago when it started, it was like 50 or 75 clients. Now it's 700 investors from around the world. 70 companies or 100 companies presenting. I think the optimism about India is actually completely justified. Modi's been doing a very good job, and things like Aadhaar to get a bank account for 700,000 people, simplifying taxes, trying to open up more for foreign direct investment, the national infrastructure program. But just think of your universities here. So we're not the only bank here. There are lots of the banks with a lot of people, but so is Accenture, McKinsey, and obviously you have your local, Tata, et cetera. So those things are driving optimism. It's not just because of the complications with China. I think that's an opportunity. I think that some of this optimism would have been there anyway. I think people should be prepared for higher oil and gas prices, higher rates, as a matter of just being prepared. You and I can guess what it's going to be. You don't know, I don't know, no one knows. But I think the odds are higher than that. And so, but hopefully we'll get to that. I think the geopolitical situation is the thing that most concerns me. And we don't know the effect of that in the economy. And so but again, I think that the humanitarian part that's far more important. I think it's also very important for the future of the free democratic world. We may be at an inflection point for the free democratic world. That's how seriously I take it.
So geopolitics, the number one risk that you believe the world is facing today?
Absolutely.
Well, Jamie Dimon there, guys. I was just talking to some people in the office. Have you guys seen the movie called Margin Call?
Yes, absolutely. Wouldn't miss it.
I was just saying that the movie character, Jamie Dimon, at least in my head, I don't know why I thought of it, resembles the most is there's a character of the bank CEO in Margin Call. Jeremy Irons plays that role. A personal favorite. He says, he asks his staff, he says, do you know why I get paid the big bucks? As well, they're all bewildered. He says, well, because for one thing only, my job is to guess when the music will stop. A week, a month, a year from now.
Oh, yes. That famous line.
And I just, whenever I see Jamie Dimon, and by the way, he's had a fantastic record trying to kind of warn. I remember before 2008, 2009, actually, JP Morgan was one of the first banks to pull back from subprime.
And they didn't have so much risk on their balance sheet, unlike Goldman and the others. Yeah.
I remember a similar kind of thing during the European debt crisis. He's someone, of course, who's got the access to data, bird's eye view of what's happening. And he's now saying that geopolitics is concern number one. There was also, of course, a small bit about interest rates. Dimon does believe that interest rates perhaps have more to go, and markets have not markets may be too complacent in saying that this inflation problem is behind us. You can catch more excerpts that interview with JB Dimon all day today here on CNBC-TV18. So that's the big one. 3:30 p.m. the show plays out again at 7:30. We'll take a quick commercial break here. Aman Chauhan of Abacus Asset Management will be joining in on the other side with more.
Welcome back. You're with us on Closing Bell, and it's time to move on. Introduce our next guest on the show. Aman Chauhan, fund manager at Abacus Asset Management, is with us. Aman, always a pleasure to have you on the show. And we're speaking to you at a pretty interesting juncture where the market rally has paused after the fierce run that we've seen. And I think the biggest debate that at least I'm hearing around me now is whether the sectors that have already run up, capital goods, PSUs, railways, this entire capex/government theme, whether it's time to lighten positions here or whether this is a multi-year cycle that has just started now. Where do you stand in this debate?
Both sides. It all depends what your holding period is. So if you have bought them for a trade, makes sense to lighten them up, book profits. If you have a 2 to 3 year investment horizon, I think there's still some steam left. Provided we have a stable government next year, which we all are hoping for.
Let me ask you, when it comes to your portfolios, I'm not sure of the exact exposure that you may have. Actually, tell us, I mean, at an aggregate level across different funds, what would the exposure be to, say, PSUs overall? And would you look to lighten?
Exposure to PSUs on the lower side. So our biggest exposure would be the PSU banks. We have the largest PSU bank in our portfolio. Beyond that, very little of exposure. We don't have defense in our portfolio. Some of the private defense name, but not the PSU defense name. So as far as PSU is concerned, not much. It will be, say, single digit across portfolio, across AMC.
Aman, hi. Actually, just sticking with the public sector as a pack, not just banks, but PSU and the rally that we've seen there. Is that the one area which, I mean, if the market has to do something about elections, pre-elections, right? Nobody's expecting, upset or anything. People are very confident that there will be continuity. But if the market has to show its nervousness or whatever, will we see that in the PSU space? That let's एक बार को profit book करते हैं फिर देखते हैं. I mean, that kind of an attitude. Or you think it's unlikely?
I think we'll see that in the PSU space. And also in the PSU banking space, because banking is the most liquid sector. That is where the FI ownership is maximum, and that's the maximum liquid where the liquidity is. So if somebody has to short, somebody has to book profit, somebody has to move money in and out, then that's where the focus would be there. So yeah, definitely, I think PSU would be impacted.
All right. Hi, Aman. Good afternoon, and thanks so much for joining in. I'm looking at your portfolio. I'm not sure whether you'll have HDFC Bank, but you'll have other private banks. I think the private bank, I think you'll have ICICI Bank, IndusInd Bank as well, and I think SBI, if I'm not mistaken. What's your view on this large bank? It's dragging the index. It's a big underperformer. Is it coming to those levels that you'd have to give it a closer look?
Yeah, the first name you mentioned, we don't own it. We never owned it in the last 4 years of our history, but it's getting interesting. Consensus numbers is close to 100 rupees EPS in 25 at 14 times. Forget price to book. Even on a PE basis, the stock is now looking attractive, and that's definitely now in our radar. So we are not yet acted upon it. Beyond that, the call for large private banks is simple, that if the GDP and the economy has to grow, it can't grow without the banking sector participating, and you have to stick with these names. In the stock market, in the near term, they may or may not perform, but as an entity, as a company, or as a bank, they will continue to grow if India has to grow. And that's where the optimism is. It's a decent credit cycle. We're not seeing spikes in NPAs. So that's where the comfort and the optimism stands for the private banks, or even for the large PSU bank that we own.
Okay, so you see comfort with the large PSUs as well as large private banks. Got that. Aman, stay on. We want to talk to you about consumer and what to expect in the months going forward as we're entering festive season. Before that, let's listen in from one consumer titan. This is an interesting conversation that Shireen had with ITC Chairman and Managing Director Sanjeev Puri. He says the company has grown faster than industry and sees green shoots on the rural horizon. Also adds that ITC will allocate more capital towards its FMCG business, paperboards, as well as the agri verticals. Listen in.
Each of the sectors or each of the verticals that you are operating in today, given the growth potential as well as the ability to unlock value, where do you think it would make most sense to consider heading the hotels route?
Well, let's take that when it comes. When it comes and where the opportunity is, right? I think it's just right now it'll be a little speculative to think about it.
Okay.
It'll be a little speculative. One has to look at it in the context of the time when it is decided, right? As far as if you were to ask me this question in another way, that within the ITC portfolio, out of our newer businesses, leave aside the traditional businesses, where is the biggest opportunity to create value? Of course, it's on the consumer side.
Right.
That I would say, yes, it's the consumer side has got the maximum potential.
The war chest, if there is one, potentially that you're looking at to be able to take some of these ideas and these trends and build them out and amplify them.
Well, we have been resourcing all our investments in the past, all the brands that we have built. We've built, 25, mega brands at 29,000 crores consumer spend. So we have the resources. I mean, resources is not an issue.
It's not a constraint, yes.
It's not a constraint. I think if at all the constraint is how creative and how well we can execute and how well we can prioritize. I think these are the areas really.
So speaking of prioritization, what is the prioritization going to be now as far as capital allocation is concerned?
So it's going to be, it's going to be more FMCG and it's going to be more paper boards. Of course, agri is also going to get some bit of it because we are moving into value added. And then generally across businesses, you also have a capex for technology upgradation, replacement. So all of that will come in. So it's going to be FMCG, paper, the major chunk, followed by agri and our traditional business.
So that's ITC. Aman, by the way, any thoughts on ITC? You heard that chat with the CEO?
Interesting. We don't own it, but definitely it's on our radar to consider at a future time. But as of now, we don't own it.
Oh, all right. Got it. Just a quick word, Aman, on I think you still own names like Ion Exchange in your portfolio?
Yeah.
Yeah. Okay. Without going into the specifics of that company, are there other ways to play this the water theme? I mean, water purification. Water is generally a theme. Many are focused on the government initiative, but are there other ways? I mean, I've heard some mentioning pump makers. If the piped water has to be kind of supplied across, the piping is done, the water is yet to come through. I mean, I've heard pump makers as one beneficiary. Again, stocks have done well in quite a few instances. But if you've looked at this sector in some detail, any thoughts?
Yeah, so it's not a very, the macro demand is good, but it's not something which has a very great company. So you can play it rightly via the pumps. You can do it via the pipe makers. So we have JSAW, HSAW pipe makers which are listed. We can do it through EPC contractors, people who take irrigation orders, people who take water treatment orders. So that EPC companies is another way to look at this. Like Ion Exchange or like engineering companies tend to this, there are not many. So there are like 2-3 companies which are listed. So Ion is one of them. So these are the 4-5 segments via which we can play the water theme.
Got that. Aman, if I remember correctly, you had Sarda Energy in the portfolio as well. I'm not sure if it's still there as of the latest monthly exposure, fact sheet and exposures. But if you do still own it, what's the thought process now when you're looking at materials or metals? I mean, a stock like Coal India has rallied like one would have never anticipated because of what's happening in the power space. So your thoughts on power/materials, going into metals?
So we are very selective. So within metal, all of the companies that we own would have some event or some trigger or some specific reason why we would have bought it. In Sarda case, it is the opening of the mines, which will help them in their cost benefit. The stainless company that we have just merged group entities. Now it has become the largest stainless steel company. So there's some reasoning behind each and everything. It's not a broad macro call that we are very positive on steel or very negative on steel, but we have a neutral to positive view on steel. But within that, these companies that we have in the portfolio would have some reasoning behind it, where it could be some earnings growth trigger or something happening. So in the company that you mentioned, it's the mining company, which is going to help them improve margins, improve profitability. It's still one of the cheapest metal stocks, and decent management, decent company, decent outlook. So that's the broad rationale.
Yeah, the one-year chart is telling us the picture of Jindal Stainless as well as Sarda Energy. pretty good going out there. Obviously, Aman cannot name any of these stocks, but these were part of the portfolio, as we are aware. Aman, final question from my end before I let you go. Mid-cap IT, I think, that was something that you preferred in comparison to large-cap IT. You still hold on to that, or do you believe some of these larger IT companies are looking a little bit more interesting? And I ask you this because we're getting into a Q2 results. Commentary isn't going to be great. Some of these stocks have run up big time. But how would you view them from here on? Would you add or would you lighten now?
We don't have much of exposure to the mid-cap IT. So we would have some exposure to the large cap and some exposure to the small cap IT. So mid-cap is something that is not in the portfolio. Typical is Mindtree, LTI, Coforge. So these are not part of the portfolios. The reason being the risk reward is not favorable as per our viewing in this segment, because while they're growing faster than the large cap, but the valuation captures that. So if Infy is trading at 20 times and if somebody else is trading at 30, 35 times, I don't think that is justified. Yeah, you're growing faster, but then not that 30, 40% premium that you trade over Infy. So we find value in the large cap IT. We find that's the reason we have some exposure there. The small cap IT is a decent mix. It has good growth as well as valuations are not as rich as what the mid cap IT is. And that's the reason we have that in the portfolio. That's the combination in the IT that we have. Overall, yeah, for the next quarter or 2 quarters, not much is going to change. But then from then on, people will start looking at 25, and IT is more of a sequential game. So once things settle down in next 1-2 quarters, once sequential growth rate picks up, the sector can get re-rated. That's what the broad view on IT is. And we are going to grow. I don't think globally anybody has a doubt that Indian IT companies will not continue to gain market share. So even if global IT spends were to be flattish, Indian companies will still grow at a single digit because they'll continue to take on market shares from the global players.
Okay, all right. So you're clarifying on that front, then you like the larger cap and the smaller cap, mid cap, not much exposure in terms of IT. And I'll have to do some more research to get a couple of names from the small cap IT space, but that for later this evening for me. Thanks so much, Aman, for joining in and giving us your take on the markets and a whole host of sectors as well that we discussed. By the way, let's pull up the Nifty Financial Services Index. That took a bit of a leg down. It went closer to the low point of the day and it's bounced a little bit from there, I think so. So it's flirting with the low point of the day. Yes, we're back down to the day's low, 19,770. That's the intraday low out there. And I think it's just breached that mark. So that's expiry basically that's playing out. And that explains the kind of move that we're seeing on the Nifty Financial Services Index. A little bit of a short break, come back. Our technical experts will be back with us.
So far, so good. Clearly, we've got a long way to go. We're 18 year or so into a 5-year journey, but it's a good start.
The first 6 months were the taxi phase. You're now in the takeoff phase. Have you taken off?
Takeoff requires a roll, takeoff roll. We're halfway through that 12-month phase, so I'd say we're still on the runway, but we're getting close to, in our parlance, V1. 6 new wide bodies are in the fleet already, 5 more 777s coming in over the next 5 months. We're in the process right now of taking legal delivery of the first A350s. Next week we should take legal ownership of our first 737s. From a human resource perspective, we've completed the VRS phase. We've ingested a lot of new people into the business with new skills, new thinking, external perspective. Anything that is subjective is going to draw opinion and comment, and that's perfectly fine. I mean, in some respects, I feel like the captain of the Indian cricket team, that there's 1.3 billion opinions on what we do, just as there is on what he does.
And speaking of your innings as well, do you feel more like a T20 captain or a test captain?
Maybe we're graduating nearly to an ODI.
Welcome back. Well, we're just highlighting that the Nifty Financial Services Index had moved to the low point of the day. It's stabilizing out there, and positioning is such that it should hold those levels of around 19,770 approximately. So just keep an eye on that mark. Yet again, it's gone there and bounced off that mark. So it's playing perfectly to the script. Mitesh Thakkar is back with us. Mitesh, what are the calls you have for us?
I think Nestle is something which is closing very strong near the day's high, and the overall setup has also improved over here. So that's a BTST with a stop at 22,800 for a target of 23,400. And Muthoot Finance is something, which is turning or closing negative. So I'll take that on the sell side. STBT here with the stop at 1250 for targets of 1220.
Okay, STBT and Muthoot, right? Mitesh?
Yes.
Okay, got it. Thanks very much for that. So that's a quick sort of trading idea coming through. Well, on the sidelines of the JP Morgan's India Investor Summit, I caught up with the head of payments for JP Morgan. I mean, we spoke about the payments revolution in India on the back of UPI and everything that has happened since. And, Takis, who is the gentleman I spoke with, and he's the head of payments at the bank, was extremely impressed and basically said that in terms of the payment ecosystem here, we're pretty much, leading the world. Listen into a short slice of that conversation.
UPI before was, a little bit of a theory. Now it's real and it's everywhere, including in, the stands, people buying stuff for 5 rupees. So it is here. It works really, really well. We've seen the digital adoption being really strong. And what I really like and I find very thoughtful is how you guys started from creating the first layer, which is digital identity, then building payments on top of that, and then building credit on top of that. So I think the way you've done it is quite interesting. It's quite unique. It is government built, but with a lot of private sector support. And from what I've seen in the last couple of days, it also supports a lot of tech and fintech innovation on top of it. So I think it's a very unique model. Maybe Brazil is pretty close, but you guys are up there.
I mean, digital public infrastructure, starting with Aadhaar, UPI, and now, of course, there is ONDC, which is, of course, coming up. But why is this being replicated in other parts of the world as you see it? I mean, you've got a bird's eye view.
Yeah, the problem with payments is it's very, very local, right? So I would say the country closest to India is probably China, both in terms of size and the moves towards digitalization. It's just in China it happened with private companies, right? It was WeChat and Alibaba that started it. And then the ECNY, the CBDC from China, came in to provide a public network as a resiliency and an alternative to that. In India, you actually started with the public infrastructure and then the private innovation on top of that.
Okay, Prashant, that sounds like a pretty interesting chat, right? Talking about India's innovations with UPI and whatnot.
Oh, no, absolutely. I mean, for once, right? I mean, I was asking him, why is this not being done around the world?
Yeah, why don't you guys
what
catch
have you
up with
seen
us?
elsewhere and it'll happen here? But it's the other way.
It's the other way around, actually. That's quite a thing of pride, for sure. Well, let's take a break on that note. As we do that, here's some market opinion coming in from Nilkant Mishra of Axis Bank, as well as S. Narain of ICICI Prudential AMC. They're talking about the mid-cap and small-cap space. Take a look. We'll be right back.
I do think that the fact that there is a surge in inflows which is purely domestic, and the valuation discipline because of higher foreign holdings is being brought along much better in the larger caps, which is why our preference remains for the larger caps, right? So we are believers in the India growth story. We also think that Indian flows will remain elevated, but where there is no external valuation discipline that is coming in, I think mid caps and small caps, there is a lot of frothiness that is coming in, and we would stay clear of that.
The fact that the domestic investors have been very positive on equities. So I think these are the factors which is holding up the Indian markets despite valuations, particularly in the small and mid cap space, increasing consistently from March till now. If you ask people to cut your allocation to small and mid cap, the same question is asked, what are you asking me to do? So I think the challenge is that if you ask people to do something like asset allocation, it is always against the trend of the moment, but it leads you to long-term returns. And today, if you cut your allocation to small and mid caps, actually it is against the trend of the moment. So what the promoters are doing today is they are taking out their positions in small and mid caps. So every week you will have at least one promoter cutting their allocation to small and mid caps.
Okay, welcome back. So we got, 10 points cut on the Nifty's, absolutely flat. 19,666 is where we are at. Jay Bala is now with us of cashthechaos.com. Jay, good to have you with us here. Thank you very much. The market here is dithering a little bit, but it's still doing much better than what US futures are doing or European indices are doing. And the big talking point has been US yields. And of course, the dollar, which is now close, the DXY, which is closer to 106. So let's just start there in terms of US yields and the dollar. Will we see a turn down from here, or do you think there's more to go?
Yeah, we've been discussing US 10-year yields as an important asset class for some time now. In fact, I pointed out even 2 weeks back that the short-term moves for the US 10-year yields is about 4.7, and I expect that to happen within 3 months' time frame, and it's coming a little quicker. The only reason why the US 10-year yields would soften would be because the markets recognize in anticipation of a sharp fall in the equity markets, and then there's a flight to safety to yields. That's the only reason why it can soften. And from whatever happens, the longer term, we are looking at much higher levels for the yields, and we have discussed this several times. And we are looking at least 700 to 800 bips but that's a 24 months time frame. When it comes to the US dollar index, I've been saying for quite some time now that the peak that we saw in 2022 is not the peak of the dollar for times to come. And we've just seen 106, and we've seen something unique for the dollar index. We've seen 10 weeks of back-to-back gains for the dollar index. I've gone back up to 1997, 1996. I've not been able to see such a streak so far. So we are in the midst of a very important, strength for the dollar index. Pullbacks are likely to get bought, and we're going to see at least 109, 110. But my thesis is that we are headed to 120 plus.
Okay, 120
on the dollar index.
Oopsie. All right. Okay, interesting. Jay, that's not 120.
I just wondering what to ask.
Yeah, he's suddenly speechless.
But we'll talk about
that's
the
not a short-term call, it's a medium-term.
It's a medium-term call. Okay, all right. So dollar index is going to get stronger. What about precious metals? Gold was moving quite well, but then it stopped in its tracks. Gold as well as silver. How do you see both those two assets moving from here?
Yeah, precious metals are reiterating my view, and in the short term, I'm seeing at least a 10% drop for gold and silver to come through. Expecting gold to drop somewhere close to mid 1700s and silver to drop somewhere close to mid 20s. So this is possibly also backing a strong dollar thesis in the short term. So brace for some short-term headwinds for both the precious metals.
Okay, that's gold and silver. Given your overall reading of things, Jay, what next for the US market? I think the main indices have lost about 4%. Nasdaq a little more. Nasdaq I think is down about 5% in September. And historically, October is usually a big month either ways, up or down. It's rarely a quiet month for equities, right? So as you look at the next couple of weeks, 4 to 5 weeks, what are the indicators telling you?
Yeah, spot on there, Surbi. And the Dow Jones is just resting on its 200-day moving average. And for the first time, in a long time, we are seeing lower lows and lower highs for most of the big indices. And I've been pointing out that the AA rally that's happened between May and July, September, that's going to get that's actually petered out, and we are just in the starting stages of a very sharp decline for the the semiconductor index where the AA stocks are housed. So in the next few weeks we're going to see very sharp cuts for the tech stocks to come through. That will probably drive the sentiment for the overall global equities.
Jay, just one quick question. When was the last time the dollar index was around 120? Do you recall?
Yeah, I think it was about just before the dot-com boom. That was the last time we were about 121 odds. So it's been quite some time, 23 years.
Yeah.
Okay, but yeah, I mean, we are, yields are, I think, at about 15, 16-year highs, maybe more actually. So yeah, we're going back, at least in terms of records. Jay, sorry, did you already put out a view on oil? That's the other variable, which has been... Yeah, go on.
Yeah, the Brent has two possibilities now. My personal preference is that it's going to go down below the June 2022 levels, along with equity markets drop. But there is an alternate possibility which I'm keeping myself open to. If we see one more higher high come through for Brent, I think this might be the bottom for this. By this I mean the recent low of about 60 odds might be a bottom for a move towards 250 plus for Brent. But that's not my principal thesis. I'm working with a crude collapse along with equities.
Okay. So then let's come back down to the Nifty and the levels here. Since when you just outlined your views on the dollar, you're expecting October to be a month of correction for the US equities, for US tech, for sure. What about the Nifty? Immediate downsides here that you'd look at, and any trading suggestions, ideas then to play that?
Yeah, I think Nifty is likely to see some kind of pullback to the last 5-6 sessions of drop from 20,200 to 19,600. I think 19,600 is going to hold from a 1 to 3 days perspective, and we're going to see a bump up somewhere close to 19,800 to 19,900. And then this, what we have seen now, might be a preamble for a bigger decline. How big? I mean, we'll work with at least 18,400 probably it could get bigger. We'll have a better idea probably next week. But right now, I'm seeing this as the start of a drop to much bigger levels. Maybe it's the banking index, which is clocked a few points lower than its July highs. That's going to possibly clock a double top. But we're waiting for banking index to break below 43,600, 43,500. Only then it's a confirmation. So this could mostly it's the private sector banks that's weaker than the public sector banks.
Okay, all right. Jay, there are two stock calls, I believe, that you have a call on, and you're bullish on both of them. Deepak Fertilizers as well as Indian Hotel. Tell us more. What are the levels you're tracking there?
Yeah, besides Indian Hotels, I'm also bullish on another Tata company, Voltas. So, but Indian Hotels possibly is relatively stronger. So that's the reason I picked this. It's got unfinished upsides and the momentum is still strong. And as long as the stock can stay above 390, I think it's headed for 470 Indian Hotels. And Deepak Fertilizer is a bottom fishing candidate. So it's not strong on the slightly higher time frame, but quite strong on the short time frame. So place a stop below 610. If you want to be even more conservative, we can keep it below 600. 610 would be even okay for it. But I think the short-term bump up to 740 is the potential for Deepak Fertilizer.
Okay.
Got it. So that's that. Just repeat the short-term call on the Nifty for us, Jay.
Yeah, I see the path that I see for the next few sessions is that a pullback towards 19,800, 19,900, and then it breaks the 19,600 low that we saw a couple of sessions ago. But if 19,600 were to drop straight away, I would still see a bump up come back to the market somewhere close to 19,800, 19,900. And then only begin the decline towards 18,500.
Okay. All right. Thanks a lot for that. Jay, just one alert I want to pull up for our viewers. And when we're having the chat with Jay, a large trade took place on HLE Glass, and it took place at a 10% discount in comparison to what the current market price is. So HLE Glass, the intraday chart actually should tell you a couple of percentage, equity has changed hands on that one at a sharp discount to the current market price. Just thought I'll point that out for our viewers. 4% equity, I think, has changed hands.
Absolutely. So that's we'll try and get more details in terms of who's in that transaction on both sides, but that's a little later in the day. But we're just kind of wrapping up things. It's been an absolutely quiet kind of day on the Nifty. We spent the entire day within yesterday's range.